Good evening. This is Russell Malley of the myICLUB team, and I'll be taking over for Doug this evening on our support for Member Trusts webinar. And today is Tax Day, April 15th, 2025. And as usual, in our back office here on the webinar is Sean Pulrang, our Senior Support Representative, and helpful to treasurers of long time. Okay, and I'm Russell Malley, the Club Accounting Advisor for myICLUB. And a little housekeeping: if you have questions, there is a questions section in the GoToWebinar controller. You just type your question in there; it will go to Sean, and if it's need be, he'll bring it out to me. And their handouts are also in the handout section. There's a PDF of the slides for tonight's presentation, and this is also being recorded and will be posted on the ICLUBcentral YouTube channel, and we'll also have a link in the video section of myICLUB. Okay, so tonight's webinar, what's the purpose of this? Well, I'll give you a little overview of what is a trust, how trusts work, and the new partner entity type so that you can include a trust if you're so inclined as a partner in your investment club, and how those trusts will appear in reports and tax reports and different reports in myICLUB, and a little recommendations and brief reference back to what are some of the problems and advantages of having a trust as a partner in your investment club. So our regular disclaimer, I'd like to add, remember, we're not attorneys, so if you're going to need help on this, please seek professional help in this area. And we're not going to be talking about any particular ones, stocks or anything for this. If you remember, we don't make the entries for you, so you're responsible for keeping your books accurate and preparing your tax returns and making sure the proper data has been input. Okay, so let's take a quick overview of trusts. So what is a trust? Well, it's a legal arrangement where one person, called the grantor, gives another person, known as the trustee, the right to hold and manage assets for the benefit of a third party, and that third party is the beneficiary. There are many types of trusts, and we'll go into that now. And my research found there's at least 16 different types of trusts are recognized in the US, and they can be divided into two main groups. Living trusts, those are trusts that are created while the grantor is alive, and testamentary trusts, and those only get created at the death of a grantor. Now, both types of trust can be revocable or irrevocable. So a revocable trust means you can end the trust at any time, move the assets around and put them somewhere else. And irrevocable trust means the assets stay in the trust once it's set up. So the most common type that people think about including as a member in their investment club is the revocable living trust. And this is often used for estate planning. And we'll see why in a second. So the grantor is often a husband and wife or partners, create the trust and designate the beneficiaries and trustee. The grantors are often the trustees, the original trustees, and they will name trustees who do after the original grantors pass. They will have new trustees that will also be included in the trust and name them. So you have to decide when you're doing this, what assets get transferred into the trust and who's going to be the trustee at the beginning and who's going to be the successor trustees. And then the assets that are held in the trust, here's the big benefit, get transferred out of probate upon the death of the trustor. So that means your estate gets settled a little sooner, at least some assets get settled a little sooner because the assets in the trust don't have to go through probate. And in some states, probate costs are actually quite high, so that also avoids some costs with probate. So why would you want to have trust? So if you have sizable assets in the club, you might want to think, I want those to not pass on to the heirs via probate, but through the trust. So many clubs have allowed members to transfer their ownership into a trust, and typically those are revocable living trusts. However, there's a problem that started with the Bipartisan Budget Act of 2015, which changed the IRS rules for auditing partnerships. Okay, these rules became effective January in 2018. They're called the Centralized Partnership Audit Regime, and they can be problematic if you have trust in an investment club. And last month we did have a webinar I did on the new IRS audit rules, and here's a link to that on the iClubcentral YouTube channel. We'll bring it up another link later. So as a result, iClubcentral recommends that you not allow trusts in the partners because of this new audit regime. There are provisions that are not particularly helpful to clubs and more helpful to the IRS if you have a trust. So, and for most clubs, if the investment club is a learning opportunity, it's not the largest asset of the partners. So, holding it personally rather than in the trust usually is not a major issue. If you think it is, you might want to seek the advice of an estate planning attorney or someone else about other ways that you might that might be more helpful other than a trust, but still avoid probate. And that's what you know. So contact an attorney, options for your personal estate planning. Now, this is a good note that Doug had added, that many attorneys and estate planners don't have firsthand experience with investment partnerships, don't know a lot of the rules for investment partnerships and how they differ from business partnerships. So they may not even be aware of the problem of allowing trusts as partners. A good one should. I've had firsthand knowledge, and even CPAs don't know about some of the reporting requirements that are different for investment partnerships than for business partnerships. So, okay, and we have a nice reminder. The August 19th, 2025 webinar will cover the do's and don'ts of investment club beneficiaries. So kind of related, and we'll cover various ways of account ownership that can typically be used to handle payouts for deceased members other than trusts. So we do support trusts. You can have them as partners. Even if you think that's the benefits outweigh the problems that they give to clubs for having them. So the first thing is look at your partnership agreement, because that's where a club defines who can and cannot be a member in the club. So it's all in the partnership agreement. If it only allows individuals, then you would not permit without a change in the partnership agreement to have a trust as a partner. And this is my thing, always follow your partnership agreement. And remember, it is really a type of contract between all of the partners. So you want to be following what everyone has agreed upon. So in the member profiles in the people tab, and you click on edit, you can add, you see there's now a partner entity, and you can use that drop-down menu to put in trust. And then you can put in the full name or an abbreviated name if it doesn't quite fit. of the full name of the trust there. So for that drop-down menu, you have multiple choices. First is the default, which is individual. You can also have a corporation, the estate of a deceased partner, a trust, an eligible foreign entity or foreign partner, which we do not support. We'll tell you why in a minute. And also an S corporation, which we also do not support, and why will come up in a few moments. The individual entity type. So that's the default selection. Nearly all members of partnerships, investment partnerships from Better Investing that use the myICLUB club platform are individuals. So now there is a lot of clubs like to have spouses as individual members jointly. That does add a little bit of complexity. It can be done. We don't particularly recommend it. You only have to put in one social security number. It's hard to put in both names into the space. And you really only need one member's name on the generated tax forms if they're filing a joint return. It's a little different, harder if they're doing separate returns. Now, also, you have to think about if there is a joint return, are they both actually contributing? If one's only contributing, why do you need the other partner on there? And if both are contributing, why not have them both have their own vote and have separate memberships? I know several clubs, mine included, where spouses started as joint and then decided they wanted their own vote and separated, became their own members separately also. Corporations and S corporation entities. I've never seen a corporate member in my 30 plus years of working with Better Investing and myICLUB and its predecessor, so that's really rare. S corporations, they can be. I've seen some, usually they're not partners. Some clubs like to organize as an S corporation. But there are some special considerations. The audit rules limit the number of partners you can have. And if you have an S corporation as a partner, you have to consider all of the members of the S corporation also as members of your club for the audit rules. So those are some of the reasons why these are not supported in myICLUB, especially the S corporations. That makes it harder to opt out of the new audit rules. Estate of a deceased partner. Well, this is rather uncommon. It might happen, but the model partnership agreements from both Better Investing and myICLUB have provisions that upon the death of a partner, they are automatically withdrawn. So you would just process a withdrawal for them and you wouldn't need. So you shouldn't have to change that entity type upon the death of a partner. Now, it may be necessary, but only unless there are some estate issues. It's taking a much longer time to settle the estate. And so if that happens, though, the club may need some professional advice if the state has some settlement issues. I know we had a couple ones recently upon the death of a partner, no heirs came forward, and even the attorney for them couldn't identify heirs. Once one is identified, the heir didn't get in contact with the club, so it made settling the estate taking much longer and what to do with the members' withdrawal. So those are pretty rare. I've only seen about 3 or 4 of them in 20, 25 years. So. Eligible foreign entity and foreign partner. If you have a non-US citizen as a partner, there are additional tax forms, plus you have to withhold taxes on their share of the gains from the club. So you have to file and pay taxes in advance for this member. There are additional tax forms you have to file with your 1065, and that's one reason we're not supporting foreign partners in myICLUB. It just adds complexity and probably unneeded complexity. Now, a foreign partner does not mean someone who is a permanent resident alien in the US. They're not a citizen, but they have a green card and can work and pay taxes in the United States, and they have a social security number. So those are not considered a foreign partner. So when you enter the trust type, you probably would enter just the name of the person who's going to be attending meetings and being responsible for the trust, probably a trustee. And then for that partner entity, just select trust in the drop-down menu, and you can put the full name of the trust or the slightly abbreviated name. Trusts tend to be much longer names than just first and last names. And we have a nice example here, John Smith Revocable Living Trust, dated November 21, 2022. You can't fit that in just a first and last name field. You can fit most of that into the trust entity name. And but really important, the things that are really important to have in that are the name of the trustor, that it is a trust, and the date of the agreement. So for the above example of the John Smith Trust, you could put John Smith, abbreviate revocable trust, and then put the date, and that should be acceptable. The IRS will know what's going on. Now, what do you use? What will you see on club reports? Well, you will just see the member name on most reports, like the member status, member payments and fees. On things that have to do where you're going to be possibly filing or needing information for taxes, the full name of the trust will appear, or at least as much as you put in that entity name. So member withdrawal report, tax summary, and of course, your state and federal tax returns. The trust name will appear on those. Right? And as we said before, people who had trusts and we've only had first and last names, they try and break up the trust name between the first and last name, which was very awkward and actually made it really hard for printing that into the tax forms. That didn't quite fit right. Now you have to decide, the trust, of course, is going to need a tax identification number. You should just enter that in the Social Security number field of the member profile. For most revocable living trusts, the Social Security number of the grantor is usually what's treated by the IRS. Revocable living trusts, the income from that goes to the grantor, who are usually the beneficiaries until one of them dies, or the person dies, or if it's a joint one with the spouse, when one of the spouses dies. So the Social Security number of the original grantor and original trustee should be used as the Social Security number and tax ID number. So what are the rules about trusts for audits in partnerships? So as part of the centralized partnership audit regime, you have to have, one of the qualifications is all of the partners have to be eligible partners, and there is a list of who is an eligible partner and a list of who is not. And in the list of who is not an eligible partner are trusts. So you cannot opt out of the centralized partnership audit regime if you have a trust as a partner. All right, so you have to go, since you can't opt out, you have to use the rules of the CPAR. All right, those rules are much more favorable to the IRS in cases of tax underpayments or penalties. They're paid at the time they are, the audit finds them. You don't go back to the time of when the year of the tax return. For example, if they audit the year 2021, they would ask you to pay that in 2025, and all the partners who were partners in 2025 would be coming out of the value of the club in 2025, rather than going back to the partners who were partners in 2021. So that means if someone joined the club after 2021, but they're a partner in 2025, they're going to be bearing some of that cost for mistakes that happened when they were not a partner. So If you can opt out, it's best if you can. That's why we recommend you do not have trusts. So you can opt out. You do have to opt out every year. It's just a question on the 1065. It's part of our tax, the club tax program. Okay, now if you are able to opt out, then those past liabilities are borne by the partners at the time of the shortfall or the penalty occurred. So the IRS will go after them rather than the current partners. So this was the topic of a whole webinar from last month in March 2025. Here's another link to our YouTube channel where that is. And yes, I did present that one last month. You get me 2 months in a row now while Doug's taking a little break. And do we have any questions, Sean?
No, it's, I think you have rapt attention. I have not seen a single thing come across the question box.
Okay. Well, we either confused them so much they don't know what to ask, or it was clear. So this is my, if you want to email me with questions you come up with later, here's my email address, rmalley@iclub.com. And if there are no questions still,
Oh, all clear.
I think we'll go back. That was the last line.
All right. Well, I guess we'll call it a, I guess it's an early,
Early
a half
evening.
day, half night. Yes.
Yep.
Well,
And
thanks.
those of you who haven't filed, get back to filing. Okay.
Exactly right.
Let's hope that's not true. You've all had. Oh, is there a question pop up?
Nope. Just someone saying thank you for taking the time to address trusts in clubs. So you're very welcome. We're glad to be here.
Okay. Well, thank you for attending, and put us on your calendar for next month. I don't remember what the topic was offhand. I think Sean will be covering something next month for us.
I think so. I think you're right. My turn. All right. Well, I wish everybody good night. Russell, thanks again, and
Okay.
We'll see you all in a month.
Good night, everyone.
All right. Take care, everybody.